When you log in, Gary, you can change your name to whatever you want. Okay. All right. Good morning, everyone. Let's get the charts up. I like that. Good morning, Tehran. All right. So, look, we had the big gap up yesterday, relatively big gap up, and went nowhere. A lot of running in place. There was a point in time where it was attempting to roll over. I shorted it. It didn't move very far to the downside, stopped out with a little profit, and it went up. Didn't go up very much. So we've got a lot of running in place today. I guess this was probably about the time where it started to roll over. I guess right around in here. Anyway, formed a little trading range, and now this morning things are down a bit. So the choppy consolidation, digestion of this prior move and gap up continues. So 359, let's around 360-ish, gapping under this little green bar. So is that really significant? Well, not really. It's not really. I mean, it is gapping down below that bar where buyers stepped up into the end of the day. And so down below here, it does put a little shelf of resistance up above and opens up the door to move down. But when I say significant, does it suggest a bigger correction? Not yet. It just doesn't yet. We'll see how far this goes. It's only Tuesday. And still uncertainty. There's a lot of talk about this election thing and what's going to happen. And next shoe to drop as to who knows what. It's crazy times. And so rightly so. Market participants are playing, I guess an anticipated end of year rally. Maybe they're thinking who's in the White House really doesn't matter all that much. Who the heck knows at this point? Anyway, day by day, we just know that this is the kind of pattern, as I've said, that historically results in choppy price action. And that's what we're getting. So, staying in between here for a period of time and building support is a positive. Now, while that happens, some of the bullets are being used, meaning breadth. Breadth was decent yesterday. You can see right here. And the option traders were buying calls. And so it hasn't moved our moving average into a sell zone yet, but this gap down this morning, we'll see how long it stays down. Should it come back and rally back up again, which would be another bullish sign that prices are going to go higher, that is going to, eventually get this to come up here. And then we'll see a short-term top within a few days to a week or so. We don't have that now. So far, we're kind of in limbo of this being neutral, this being bearish, which says excuse me, be somewhat careful on the long side when breadth gets up into this top of this bearish area here. There's tendencies for breakout failures and just more digestion when that happens. Let's take a look at the other markets. Look at the Qs, which started out weaker and then started showing some relative strength, but really didn't go very far either. It's really messy kind of price action. 293. It's about where it is. Up a little bit unchanged. See there, it's just opening up here. That's got room to go higher. That's probably maybe the most constructive one. What is the breadth indicator you were showing us? McClellan oscillator. You can see it anywhere. Later in the room, I'll give you a link to a website and you can track it for free. And looks the same, exactly the same thing. And most software packages have it in there. This looks like it can continue to move higher. Let's see. This is your on the Qs. If it breaks below 291-ish, might have a little top up there. And I think we're just going to continue to see choppy price action here. And, until we get something that proves otherwise, looking at the weekly chart so far, the price action is staying in the upper part of the wide range bar, and that's a positive. But at some point, it's got to break out of the range, right? To go higher, it's got to break out of the range. So having a couple of weeks here of chopping around is actually a positive event. Where it has, there's this attempt or potential attempt for sellers to take control and knock it back down. And so far, they haven't been able to do so. But it's erratic price action. So day trading opportunities, if this can continue to push up. For the most part, yesterday I didn't care for what I was seeing. Things were too out of sync. And starting with the ETFs today. So the Russell here down at 175.5 or so. Gapping below a gap up bar near the top of a red bar. It opens up the door to a possible M top being in place if this stays weak. I mean, overall, looking at the weekly, it gapped out of there, and that's a plus. But we'll see what happens here, right? So this gap fill area, 153.50. 153.50. Come on. Not that far away. But in between here and here, there's nothing to stop it. So that's where we'll see if buyers really want to step up and, looking at this and saying, oh, shoot, what happened here this morning? And it comes down there, and then they drive it right back up again or not. So just taking a look, a little data there. I don't really like this as a thought of doing something first thing in the morning, even though I'll look at the futures, the way this went down and began to accelerate it into 8:30, 9 o'clock here is like that. It looks more like the end of the move. But once it opens up, we'll see if it can hold it together. They have a website, McGraw. I think they just try and make more out of the tool they created than what it offers, tell you the truth. It's pretty simple stuff, but, they sell subscriptions for like in-depth analysis for stuff that I think is overdone. Anyway, let's look at the futures. Let's look at transports here. That looks great. So markets chopping around, transports move up like that. We don't know where they're at. They don't trade pre-market. I guess we could look at stocks that are in the transports, looking at airlines and stuff. Look at the ETF jets. 2050, gapping down. It's going to be a shaky open, that's for sure. All right. ES, really not a big deal. Moving up, just strange kind of pattern. That big move and coming down again and consolidating. And you see this topping pattern, the breakout and deep move back in again. Looks like it's going to go lower to where? Daily chart doesn't support anything super bearish, but hey, for intraday traders, it's not bad setup for us to be shorting. We'll keep an eye on that. NQs. Nope, just sloppy sideways. Nothing. Look at these moving averages. Just all wrapped around each other. The proverbial spaghetti screen. Stay away. Same thing here. The Dow rolling over. Russell. Have a roll over there too. Similar patterns across the board. Bonds. Just trying to hold that support down there, just whipping back and forth. Slopping back and forth at resistance. So far holding up. Okay, and gold. Just a mess. There's just messes everywhere. Look at this breakout. It immediately came back in again. That just kind of like a punch in the stomach, Just move up and come back down again. But hey, if you're not using automated software that can, stop you out and take profits where things happen quickly, if that's part of your plan on how to handle it, you really need to get tools that enable you to play the game. Anybody has access to those kind of tools. Anyway, internals are neutral, patterns overall are all neutral, and the chop continues while we wait for whatever we're waiting for. This presidential thing to unfold as to which way it's going to go. What support levels do you see for ES and SPX? Well, this is the obvious one right here. 3560, 3550. I mean, it should hold that if, from the bullish point of view, get this congestion. And, if it comes all the way down here to 3520, well, now the daily starts becomes a breakout failure. The depth of retracement down to here puts this whole move up in question, because now you've got that open void down below. So bulls need to hold it. I think generally up around 30. If they don't do that, they begin to lose control of the situation. And this type of price action for now, while short-term bearish, making a chop and it's breaking out and being rejected, and it came back up and it's being rejected, and getting this bit of a trading range. As it's beginning to roll over as I speak a little bit, it is multiple bars down. So you got to be a little hesitant about shorting here without a 5-minute pattern that is supportive of an entry. So we don't have that now. And if we look at SPX, so let's go back here because SPX doesn't move. Right, 3,600. That's a really important level right there. 3,500, 3,550 to 3,500. It retested it. Here, filled the gap. It retested it. It went up. It's at the top of the range, and now it's moving lower. So this needs to become the upper trading range for SPX to stay bullish. All yours, Dan.
Good morning. Yes, there's some interesting news out today, so let's jump right into that. All our opens are fine. We've been adding some out-of-the-money put spreads on oil stocks. They're coming in a little bit today, but they're out-of-the-money put spreads. They're fine. The news. All right, yeah, John's asking right here. Amazon bear call credit spread. Amazon bear call credit spread is gapping up to 31.92. No, no, it's gapping over last week's pivot high. Yeah, put spread. And I know McGraw did one yesterday, so good job. Quick draw McGraw. Nice job there. So Amazon is a very bullish gap here for a put spread, not a call spread. So the news is they're gonna do the pharmaceutical, get in that business. So obviously you gotta, whenever you trade news, you just ask the basic question: who's gonna benefit? Who's gonna get harmed? So the harm is the direct competitors, the drug retailers, right? So look at CVS getting whacked here, 68.50. So now that's a bear island reversal for a call spread. WBA 40.42. I mean, that's an ugly gap Amazon's causing on these folks. I'm wondering, with the release of information and all that, I'm actually shocked that that news didn't leak out to put somewhat of a cap, because these things have rallied robustly. RAD 1145. These are all three bear call credit spread candidates. McGraw MKC, the distributor. Okay, I can't tell where they're gapping to. ABC gapping down 103. Yeah, another call spread candidate. Sure. Yeah, so let's look at all of those. Big C and Stag. Big C is a gap breakdown yesterday. We actually sold an out-of-the-money call spread, and it's gapping up a little bit here, but you got 2 days of walls of resistance, so I have no interest in buying it under yesterday's low. You can continue to short it. Yeah, hey, Alan, I'll get to Tesla. That's the other big one in the news. Let's see, Stag's gapping. It's a bearish gap under 30 bucks right here. You got this prior low. You just got to put it in a window. I have no idea what it's going to do, but it's a bearish gap. Pan W short entry swing. It's not a swing short pattern. Yes, it's short-term extended, and it's only gapping down. It's gapping. It's still, the gap is still in the upper 2/3 of that. So no, that's not a good short swing setup at all. A 30-minute low could be a day trade, but this is not a swing short pattern. You would need more of a shock, more of a shock to swing trade it, and in which case it would be the gap fill would be your target. Tesla in the news here, saying they're going to be added to the S&P 500. That talk's been going on a while, but this is kind of a big kind of ascending triangle here. You know, you draw trend lines, you got higher lows, you got relatively equal highs, and it's gapping to the upper end of it now. If this holds its gains, 30-minute high, I want to sell a put spread on this thing. And we'll obviously, I'd prefer it to come a little cheaper and then give us an intraday bullish one. But this also is dragging up the electric vehicle, the EV sector, which has been on fire lately. I think I read something on NEO here today that its market cap is bigger than General Motors now. Isn't that funny? So yeah, that whole sector is getting a little pop. Costco here saying they're going to do a $10 special dividend, and the stock cap's up $10. And I was telling McGraw earlier, I'm like, I just don't understand these fundamentals. You know, I'm not going to get into it now, but suffice it to say, when you pay a dividend, you're just returning part of the shareholders' money to their own pocket, right? Because there's shareholders' equity is assets minus liabilities, and so by you saying you're going to pay a dividend, your net equity has not changed. So why is this gapping up $10? It's like they just created a gift. Like, hey, I'm going to give you all $10 a share, and the stock's gapping up. So you got a gift. I don't know. I don't understand it. I was watching Stephanie Pomboy on CNBC today. She's a sharp woman. She runs a Macro Maven. I actually met her, Greg, through David Tice. I met her at a conference in Dallas. So she's a smart woman. And then Steve on CNBC, I was watching him earlier also. And they were both saying what I've been saying for months. You know, they said it more eloquently than I am sure, but they're like, hey, the values right now, the markets are way ahead of themselves on the optimism of what they think the best news case is for all the bad things that we're dealing with right now. What are the bad things? Coronavirus, economy opening, vaccine, stimulus, no more presidential problems, China, you know, whatever bad news they're saying, the market just has it priced in a Cinderella outcome, and fundamentally they both say that they don't agree with that, and I frankly don't either, even though I'm not a fundamental trader. I've been scratching my head since this incredible rally to all-time highs. I mean, the diamonds here at all-time highs, and what? And so much of the economy is still shut down. So I just scratch my head and like, no, don't think too much about it. We're chart traders. We're just gonna do what we do. Oh, COM, I didn't answer. Somebody's asking COM. It actually looks like a great bottoming pattern on the weekly. It's a bottoming pattern. The only problem is you don't have a big price void, so I would never give it as a core long. But you can buy over the high. I mean, if it holds the strength here, I can't tell where it's gapping, but if it holds the strength with the market gapping down, then that's relative strength concept, right? So it's worth over the high. Alan, Qualcomm. Yeah, somebody mentioned this yesterday, and I said it needs to get over the highs. It's gapping up a little bit here. It's definitely worth watching. It's gapping up in a weak market, maybe 30-minute high, Alan. Hey, Steve Sarl, welcome. I don't recognize your name, but where you're typing to us, if you can change your drop down, all panelists and attendees. He's asking about going long this stock, PCG. Absolutely not. We do not buy after multiple up bars far from the 20, unless it's just a bullish day trade on the 15-minute chart. Codex short, gapping down 1186. Yeah, I like this one better because you have the upside shakeout. It's a bearish gap, maybe 30-minute low. Codex. Nathan plug gap. Yeah, bearish gap, 30-minute low. You know, you just gotta put them in a 5-minute chart like this and see what they do. You see how they set up. And that's what I call, you know, my tier ones, that I just put them in a window and see what they do. PPC, I think that's oil. I think we'll hold off on oil today just because they're coming in and we actually have a number. We're pretty. I got us a pretty good inventory in oil, and the sector's gapping down. Pfizer. Nah, it's just gapping to the prior highs. It's a mess. It came in with overlapping bars and gaps and green bar ignored. Nah, I don't like that at all. All right, let me continue here for 2 more minutes on gappers. Well, here, Walmart had earnings. That's another big story. Gapping down to 150. So gapping down after it had a 5-day rally into earnings. This is also a bear call credit spread watch, 30-minute low. KSS had earnings. It's kind of a neutral mess. Tree, I don't know if this was earnings, but down 31 bucks, 290. That's an ugly gap, but it's the support, so nothing to do. Home Depot here had earnings, gapping down 273. This could be a day trade short and out of the money bear call credit spread idea. Codex, yeah, so yeah, Steve asked me about that already. 30-minute low. SDC had earnings. It was actually a higher low right here. If this can negate the gap, and trade over yesterday's high, then I like it long. Target 11 to 12. Do you all see that? How I'm visualizing that ahead of time? It's a bearish gap. So I'm just painting a scenario in my head if it does that. I mean, under today's Tuesday, so under Friday's low, then maybe it's a day trade short. But I'm always also looking at, you know, anticipated failure problems. Starbucks short, I don't know, maybe 30-minute high, but you know, it's in an uptrend, daily, weekly, monthly. I'd rather short weakness. Baidu had earnings. That's a mess. Although I think the monthly has room. LiveX, it's $2 stock, but this thing looks horrible. I don't short stocks under $5 myself. Rad, yeah, you can short a 5-minute low on that day trade. Stop over, I'd say over 1160. This pre-market base would be my stop. Stag, yeah, we mentioned was a fair gap down. Oh, API, I sent to our subscribers. Look at this bear gap breakdown, daily, weekly. This is not bad at all for a 5-minute low. Hey, Kurt Carlson, good morning. Your drop down. All right, Q's, obviously the strongest. Tesla coming in. But this is the best looking new short I've seen so far. So I'm going to put this in a window on my other screen. Actually, I'll put them right here. API, let's give it 5 minutes. Hey, Debbie. Earnings, gap, it's a big mess. GDRX, that's a nasty gap to all-time lows from a recent IPO. That's not good. Nothing to do with it, but that's nasty. CBAT, bearish gap down, but this thing's been on fire. Looks more like a day trading toy kind of setup. CBAC, that's same. This is what we call a bear island reversal and a shock pattern and a climactic sell setup. Nothing to do with it right now. Gap in a support and it's bouncing, but you know, that thing rallied vertical. That's a nasty gap. Now look at this LSCC. We were in on day trading yesterday. That still looks good. That's a 1, 2, 3. If it closes like this, that's actually nice right there. AMD. We were trying to short a put spread yesterday, and we didn't get our desired. We didn't get our desired juke. This looks great now. Maybe we do a put spread for next week now. This is now clearing. See, here's another one, folks, where I said over the red bar. So in the weekend letter, over Friday's high, I said sell a put spread. And look, this is exactly a picture I was looking for. And now it's a continuation of yesterday's bullish engulfing. So that looks good for a day trade again, and not a great swing really, because you got all it's in a trading range, and you're gonna bump its head on resistance. But let's look at SMHs. They were strong yesterday. Wow, my trade station is slow. Slow. Come on. CMCSA, I said move stop 5-minute low. It gapped under our stop. It'll still be a stop out at a profit. YY had a nice gap up, but you know, right to resistance, so nothing to do with that. SE, this isn't bad. It's sloppy, but it's bullish price action. Plant, yeah, that looks good. Now that's one not crazy. I wouldn't chase it right now for 2 reasons. One, the pattern. Number 2, the market. But it's definitely worth. Here, API, bottom right, 5-minute low. I like this as a day trade short. Now, if you're just day trading it, you could have a stop over the pre-market high. If you're swinging it, then stop. You got to start with a stop yesterday's high. So now we're taking out 5-minute lows on spiders, diamonds, Qs.